Hi there, I'm Dara McDermott and you're watching Targets in Focus on the first day of this trading week. I am joined today by Kiran Kowshik, FX strategist at BNP Paribas in London, to have a look at the Aussie dollar, the cable and the euro dollar. So let's begin with the Aussie dollar. Now the Australian dollar climbed to a 3-week high on speculation minutes tomorrow of the RBA's meeting this month will actually reveal the central bank is in no rush to cut interest rates. So what sort of trading patterns are we witnessing today? And of course, how do you expect it to react after the meeting?
In terms of the Australian dollar, I'd place a lot more importance over the near-term outlook for China. In that sense, if you know, when I go back and I think about the fall in the Australian dollar over the past 6 months, I'd say about 70% has to do with the deteriorating outlook for China. And given things are looking slightly better there, data is picking up. You also have Chinese officials talking about increasing financial support to the economy. I think there's a vulnerability to the large short positions in the Australian dollar. So I think really China and the improving outlook there in the near term is what drives Aussie higher in the next couple of weeks. So I think Australian dollar will track Chinese equities higher. In terms of the RBA policy meeting minutes tomorrow, I do not think it will be too much of a mover because when you actually think about it, before the last RBA meeting, the OIS market was pricing in another full 25 basis point rate cut by December. In recent weeks, that expectation has halved, so I think the market has removed quite a lot of its dovish bias on RBA. So I don't think tomorrow's RBA minutes in themselves will be a big Aussie driver. If they do sound a little less dovish in the minutes, I suppose that supports Aussie at the margin, but I think the outlook for China is a lot more key here.
And Kiran, how do you see the Aussie dollar trading in the short, mid and long term?
We think over the next one month, you should pretty easily get towards, probably back to 94.50 type levels. Certainly, we think that's the way things will play out. Even if the dollar remains strong, we think there's quite a scope for a short squeeze on the top side. In terms of our medium-term forecast, we're not as bearish on Australian dollar. So, for instance, we're looking for a year-end forecast of closer to 97. So we see a gradual recovery there towards the year-end. And I guess a part and parcel of that will be a little bit of softening in the dollar, should the Fed move towards taper, and you see a bit of a sell-the-fact type response on the dollar side as well.
Now let's move over to the UK. The major theme in London last week was sterling's appreciation against the backdrop of a commitment from Mark Carney to an extended period of low rates in the UK. So what are your thoughts on this?
Yeah, well, I think sterling is at a risk of continuing to move higher in the near term. And the reason I say this is I think the way the Bank of England has actually set policy, you will actually see the market trying to front-run the Bank of England, i.e., you will see sterling strengthen on any signs of strength in the economy. And moreover, you're seeing this data has actually been improving in trend terms. If you look at a data surprise index for the UK, it's been moving sharply higher. But going forward, I think there's a couple of things which are very key. Mark Carney speaks in Nottingham on the 28th of the month. That comes a week before the September 5th meeting of the Bank of England. And what I would say is a lot of the short-term rates in the UK have risen very, very sharply higher. In fact, if you look at something like the 3-month OIS, 3 years out, something the central bank, in my opinion, is targeting or looking at closely, it's back to the levels seen in late June when the Bank of England were concerned about higher rates in the first place. So I think what will happen on the 28th will be very key. If Mark Carney comes out and pushes against this higher rate speculation, I think maybe the sterling could come under a bit of pressure back then. But until then, there's really nothing to stop it on the top side.
And Kiran, are your targets the same as they were the last time we spoke, or have you adjusted them at all?
We haven't adjusted our targets as of yet because we think, in a sense, we think the markets will push the Bank of England to get more dovish in the future. So we think they will drive sterling lower. But what I would say in the short term is, I guess, the bias is still to the top side on cable. It wouldn't be a surprise if we go towards that 157 level. But I think, as I said, what Carney does on the 28th of the month and the signal he sends will be very key. If he does come out and say they will react to this rally you're seeing in yields at the short end of the curve, I think probably cable comes back down after that.
And now let's have a look at the Eurozone and the Euro, which was 0.4% from a one-week high against the US dollar. Now this was before German data, which is coming out this week. So do you think we will see positive results that show us that the Eurozone is actually gaining momentum? And how will this affect the Euro?
So look, in terms of our cyclical data, you're right in saying that the near-term outlook's improved. So certainly, the PMIs have moved above 50 back in July. I guess the data this week will probably show a continuation of that theme. But, as I've mentioned on this show before, the euro is very strong on a flows perspective. I think what we really need to focus on is the trade surplus in the Eurozone. It's increased incredibly over the past couple of years, and I think that's providing a support to euro and euro crosses more broadly. And, what we actually say is if you want to play a bullish dollar theme, selling euro-dollar is probably the worst way to do that. So I think the data will be important, but more important is this natural euro demand coming from this rising trade surplus in the Eurozone.
And Kiran, do you still maintain the same view in terms of your forecast for this pair?
Yeah, our forecasts for the euro are the same. We're looking for 126 by year end, but we would stress this is probably driven by a strengthening on the dollar side. Euro crosses, we think, go higher. So, for instance, we remain bullish on euro Swiss, euro sterling, and a number of other euro crosses.
Thank you very much. Well, viewers, do stay tuned to Dukascopy TV, as the TV team will keep you up to date with all the latest FX and economic news. Bye for now.